Essentially, for people in Gibraltar, there's a couple of things we need to think about. First of all, an increase in interest rates means that most people with mortgages, their mortgage will increase. That, coupled with the rate of inflation of how it's going right now, it means that the household's disposable income is going to be reduced significantly. And may not be the last rate increase we are expecting.
I know this is a very broad question, but how much more can people expect to be paying on their mortgage premiums?
That's very difficult to say, purely because it's not just what those £500 a month is, it's the length of the mortgage, the amount, so it's almost impossible. But if we bring the question back to inflation, which is essentially what's driving this, if you think that inflation in Gibraltar as at the end of April was 7.6%, and you think of £100 back then, so £1 in 2021 is worth 93 pence right now. So to have the same purchasing power you had in 2021 with £100, you would need right now £110. So this is how much your money is being devalued, which means your disposable income and everything is just more expensive to buy, but you have less money to spend because your mortgages is going up.
What advice would you give to someone who's already feeling the pinch and now is about to see their mortgage rates go up?
Well, I would definitely look at your monthly expenditures, and unfortunately, there's certain things which we'll all have to cut down on. As I said, this is not the last increase expected. We are looking at the Bank of England going into recession towards the end of this year. We thought it was going to be next year, but typical scenario is after a high period of inflation and interest rate increase, there comes a recession. And yesterday, the Bank of England advised that they expect England to be in a recession by the end of this year, which means we could also see interest rates coming down next year. Although if inflation is the key problem here. Inflation is very high and is expected to remain high over the next small to medium term.
Will this affect people with loans as well?
Well, loans typically are on a fixed rate. There may be loans on variable rates, which are base plus X, but a lot of loans in Gibraltar are at a fixed rate, so whatever the mortgage, the interest rate goes up or down doesn't really mean that it will affect it. It's mostly mortgages that tend to be on variable rates linked to the base rates.
I imagine, though, that for people with investments, this is good news.
Well, yes, depend if your investment is in cash. Equity markets have typically reacted negatively to interest rate increase, so your investments in equities may have gone down. But what it is on basic purely cash investments, so people had a lot of money in current accounts because the interest rates were so low it wasn't worth putting money on a fixed deposit, for example. Now a fixed deposit in sterling will give you an interest rate which might make you look at it and think, okay, I might place my money for a month, for 3 months, 6 months, 1 year, and so forth, and that will have a positive impact on savers.